just got 280 pips on gold by using the simplest 1 minute time frame strategy, which made me $2,200 in less than 45 minutes. And here is the best part, guys. There was absolutely no drawdown on this trade. Now, in the whole period of July, I've been sharing my setups to the free community, who is the arbitrage community, and it's incredible the number of people who have made money just by following my setups I post on the free community. So if you're not in the free community, please find the link in the description below and join the arbitrage community today. So only click the link below in this description to join the arbitrage community today, so that you don't fall prey to people who just want to use my name to scam people or to dupe people for their hard-earned money. In total, we have made close to 5,000 pips on gold this July in the VIP, and most of my entries are actually from the 1 minute time frame. I've had a lot of people testing me on Instagram and also on Telegram how I catch some of these entries, and I just thought of it, why not really make a YouTube video to explain to you guys how to use the 1 minute time frame to catch sniper entries. Now, I know most of you have that mindset that the 1 minute time frame is full of noise, it's not a strong time frame, you can't really take trades on the 1 minute time frame. But trust me, by the end of this video, you're actually going to change your mindset on how you view the 1 minute time frame. And I'm actually going to show you how I use some of the things I've been teaching you guys on YouTube from scratch, which is support and resistance, trend lines, candlestick confirmations, and a whole lot of other things to actually come together to catch some of these 1 minute time frame entries. So if you haven't watched my previous YouTube videos, please do what to go back after this video so you have a better and deeper understanding into what trend lines are, into what support and resistance are, how to use candlesticks, and a whole lot of other things, which is going to make your entries very beautiful. So stick with me to the end of this video and make sure you follow step by step everything that I'm going to teach in this video, so that at the end you can also apply the same thing on your chart or on your trading account to make the most profit out of the market. Now, YouTube sent me a feedback that 66% of people who watch this channel haven't hit that subscribe button or haven't subscribed to this channel. So please, if you are part of this 66%, please do well to hit the subscribe button so that you get notified whenever I drop any of my videos. I'll be very grateful if you guys reduce this number by hitting the subscribe button right below. It's not even going to take a lot of your time, just a click and then you are good to go. Thank you guys so much, and let's get into today's video. Okay guys, so this is the 4-hour time frame on gold, and we can see on gold on the 4-hour time frame, market is very bullish. Market is just trending all the way to the upside, right? Now, I'm a day trader, so when I come on the market, I'm just looking at the current market structure to find my trade. I'm not going through all the way to downside here or even to the upside here to look for my trade. I'm just focusing on the current market structure, all market is currently doing. So if you're someone that you really don't know your style of trading, whether you're a day trader, whether you're a swing trader, or you're a scalper, I would advise that you watch my previous video on why I always lost at swing trading. I started off as a swing trader, but then at a point in time I understood that swing trading wasn't good for me, because I noticed whenever I tried swing trading, I always lost on that particular trade. So then I discovered myself with day trading. And if you also want to discover yourself, whether you're a very good scalper, whether you're a day trader, or you're a very good swinger, please do want to check out my video on why I always lost at swing trading. And I'm sure you will learn some 1 or 2 from it. So then when I come on the chart, I'm just looking at the current market structure, where market is giving me series of lower highs and lower lows. Because even though we are in an uptrend here, I can see that we have price giving us series of lower highs and lower lows, which is the current market structure. Okay, now we have a lower high here, we have a lower low here, we have a lower high here, we have a lower low here, we have a lower high here, we have a lower low here, right? And let me just get my path 2 and let me show how this looks like. We have a lower high here, a lower low, a lower high, a lower low all the way down here, a lower high here, and then a lower low all the way the downside here. Okay, now from this we can see that our last structural point or our last lower high point was at this level here. Let me just indicate it. This was my last structural point, which is a lower high of a downtrend, right? So I'll just indicate it here, my last structure. Okay, so let's move to the 1 hour time frame and let's see if we have the same structure on the 1 hour time frame. So when you look on the 1 hour time frame, you can see we have the same thing. We have the lower highs, lower lows, lower highs, lower lows, lower highs, lower lows here. So this point is our last structural point on the 1 minute time frame. Okay, so at this point, let me just delete this and then draw my zone well. So I'll just take it from the body here to the wick and then draw my resistance point here very well, because ideally, even if market gets back into this zone, we're expecting that we'll have something like this. Maybe price just coming up here, retesting this, and then coming to the downside, right? If price breaks it too, we are looking at something like this, price breaking this, coming to retest here to the upside, right? Okay, now let's see what happens on the chart. Let's move to the 15 minutes time frame. On the 15 minutes time frame, we can see we have the same entry, just like the H1, same body to the wick, right? Okay, so at this point, I'm going to wait for price to enter the zone, and let's just see what happens when price enters the zone on the 15 minutes time frame. So at this point, price gets to the zone, and what do we see? When price got to the zone, we had a very strong bullish candle closing just above the zone. You can see it here, right? This candle closed just above the zone. Now at this point, I'm not in the trade because I'm waiting for my 1 minute time frame confirmation. So let's see what market does after this. Now we have price closing above this zone with a very big bullish candle, creating a new support level here. You can see price came here, shot up, came here, also went up a bit. Then lastly, when price came to the zone, also shot up. So at this point, I'm going to move to my 1 minute time frame, but then I would want to see price retrace just a bit, get into the zone. Then I'll move to my 1 minute time frame for my potential entry there. Now I can see price getting to my zone with this bearish candle. Okay, let's see what happens. Now finally we have this candle entering the zone. At this point, I'm going to move to the 1 minute time frame to check how to get an entry, because now price has tapped in the zone and I need an entry to join this bullish move. Now let's move to the 1 minute time frame. Now what do I see on the 1 minute time frame? I see price is in some sort of channel. Price is moving in a channel like this. Now at this point, I'm looking for a chart pattern or some sort of candlestick confirmation in this support zone to enter the trade. But then bear in mind that we have structures here, we have lower highs from here, and I haven't seen price giving me any series of higher highs or higher lows to indicate that there's a bullish trend likely to happen from this zone. Because at this point, all that I see price giving me is just lower highs and lower lows. But I want to see price giving me some sort of higher highs and higher lows. Then I'll just wait to see what price does. So price is still moving in that same channel. We are not getting any chart pattern formed yet. We haven't gotten price to break any structure yet. So we are just waiting at this point. Then price enters the zone. So bear in mind that we are waiting for a clear break of structure of this trend line or some sort of chart pattern to give us confirmation to enter the trade. Okay, so let's see what happens. At this point, we are still not in the trade because even price giving this bullish move doesn't warrant you to join the trade. Now I can see some sort of chart pattern beginning to form here because we have something like an inverse head and shoulder forming. But then remember I mentioned that for inverse head and shoulder, we need to have the neckline broken. So I'm expecting something like this. Then a neckline broken, which is this structural point here, before I consider this as an inverse head and shoulder. Okay. So now what do we see happen? We saw price breaking this inverse head and shoulder neckline to the upside, right? Now another thing too I see is price giving us some series of higher highs, which is here. Okay, we have a higher high here. Then we have a higher low at this level here too. So just indicate here as the higher low. So as price has broken this neckline, let me just indicate here as a neckline, okay? Neckline. So we have here being our neckline, and then just around our neckline, we have our higher high just at the neckline area. Now, as we have this inverse head and shoulder form, okay, and we have this neckline here being broken, let's see if market pushes up more so we can have a new higher high. So market pushes up more to this level here, and then we can see market closing with this bearish candle. So I can tell that market is ready to retrace to give us new higher low for a push up to the upside. Okay, so then here's when I take something called the Fibonacci retracement tool. I haven't taught you guys on how to use the Fib tool yet, but then trust me, I'm going to do a video on it, show you how to use the Fibonacci retracement tool correctly for your pullback entries. So I'll just take the Fib tool, then take it from my higher low here, my last higher low here, to this new high that we just created. Now after we use the Fibonacci tool, I'll just come here, take my rectangle tool, and then draw my golden zone, or the zone that I usually trade from on the Fibonacci tool. Once I'm done, I'll just delete it. Then I'll wait for price to retest this zone here for buys. So I have my long position tool here. I have my SL, maybe let's use 20 pips here. And for TP, let's go on the 1 hour time frame to find the next structural point. So we are going to be targeting this level here for our take profit. So now coming back to the 1 minute time frame, okay, we are going to take our profit at this high here, which is 134 pips by risking just 20 pips, okay? Now let's see if we get an entry from the Fibonacci retracement tool, which you can also take from the neckline break and retest. So you have a neckline being broken and then a retest of it. Now if you don't know how to trade chart patterns, watch my video on chart patterns to learn how to trade this inverse head and shoulder. So at this point, I'm just going to wait for price to come and then maybe touch on the neckline here or tap this Fibonacci zone that we have here so that we can take the trade to the upside. So then let's see if price reacts from that zone. Now we have price coming back into the zone and tapping just at our entry. You can see it right here. Price tapped our entry, also touched the neckline. Now at this point, we have two confluences here. And what I mean by this is we have a neckline break and retest. We have this neckline being broken and then a retest of it. And also we have our Fibonacci zone coinciding with our neckline break and retest. So this is like a double confluence for you to enter the trade. Okay. Now we have price just tapping the zone. And then at this point, we are in the trade. So around this point, we are up about, this is about 17 pips, okay? We are almost doing a 1:1 risk to reward at this point. Then we have price breaking all the way to the upside again, giving us new higher high. Then we have like 20 pips now. So at this point, we are on a 1:1 risk to reward ratio. But then let's see if we get to our TP. Let me just move to the 15 minutes time frame by extending this level here. Let's extend this out 2. Then let's move to the 15 minutes time frame. Okay, so on the 15 minutes time frame, this is what we have on the 15 minutes. Okay, now let's see what price does and if it gets to our TP, because this is exactly how I analyze the trade and how I took the trade. So let's just play ahead and let's see what price does. Now price shot up, and at this point we are up about 55 pips just from this 20 pips SL we have here. And currently price is heading towards our TP, which is, this is currently 120 pips, okay? Now we have price breaking through another structural point here. So we've taken profit here, okay, we've taken profit here, which is we have a 1:6.71 risk to reward ratio. We reached just 20 pips to gain what? 130 pips, 1:6 risk to reward ratio. But then we can see something very interesting here. We have a new lower high being broken, because here was the last structural point also. So we have a lower high here, and then this big bullish candle also closed above this lower high point. So as we can see, price has broken out of this structural point we have here. So I'm looking for something like a retest. So we're looking for a retest back into the zone here to the upside, right? Now let me move to the 1 minute time frame. Now the 1 minute time frame, we can see price also close above the zone here, right? So I'll just take my Fibonacci 2 because we're expecting like a retest back into this zone. Okay, and then a push up to the upside again. So this is like a new potential entry for buys in the market. So I'll just take my Fibonacci to take it from this last structural point here. This was the last higher low point the market created. So I indicate here as my higher low point. So I have a new higher high also being created here. So we'll be looking for price to pull back into this last structural point here and then pull up to the upside. Now, when you're using Fibonacci tool, you take it from the swing low point to the swing high point in an uptrend market. So I'm taking it from this higher low point to this higher high point here, and then I'm going to mark my Fibonacci golden zone, which is the 50% and then the 61.8%. Afterwards, I'll just delete my Fibonacci because I don't have use for it again. And my new entry for buys will be at this point here. So you can just risk maybe about 30 pips also. Okay, so now for our take profit, you're going to target the next high point on the M1. We can see we have our last high point here. So let's just indicate here as our last highest point. So this will be where we take profit at. So we extend our take profit to this level here, which is about 95 pips. Okay, now we are risking 30 pips for 95 pips, which is about 1:3.1 risk to reward ratio. And let's see if we get an entry upon the retest here. You're waiting for price to retest our Fibonacci zone here to the upside. Now bear in mind, our Fibonacci zone also coincides with the previous lower high structure. So you're waiting for price to retest it. If it doesn't retest it, there's no entry for us at that point. We are targeting this last structural point here, which is the last lower high point on the M1. Let me just indicate this as the last lower high point. And you're risking just 30 pips for 90 pips, which is like a 1:3.1 risk to reward ratio. So then let's see if we get an entry based on this strategy. So you have price coming down. Now bear in mind, we didn't touch the zone here. So at this point for me, I'm not in any trade. I'm just waiting for price to tap my zone before I enter the trade. So price is coming down again, and then suddenly price taps this zone. And what do we see? We see a rejection straight from this zone. So at this point, we are tapped into the trade, and then we are just targeting this high here. So let me just move to the 50 minutes time frame. Now let's see how the 50 minutes time frame reacts in our zone. So let's play and then see what happens. Now price taps into our zone. Currently we have about 63 pips by risking just 30 pips. And let's see what happens again. Price pushes up towards our take profit zone. Here we have about 85 pips. Okay, now let's move to the 1 minute time frame and then see what happens at this point. So on the 1 minute time frame, we have price coming back into the zone and then pushing up all the way to the upside. Now at this point, we've had our TP smashed just by using this simple strategy to catch 130 pips here and then also 90 pips here. So in total, this 20 pips that we risked has given us about 280 pips just by risking 20 pips. Now this is a crazy risk to reward ratio. Just look at how it looks on the 15 minutes. We just risked 20 pips here for 280 pips. Now it's very incredible how some of these M1 entries gives you like insane pips and also helps you reduce your stop loss by catching all these moves to the upside here. So this is how I caught 280 pips on gold after FOMC on Thursday, and you can see how beautiful this trade looks, right? So just for those who have been asking how I caught this trade with no drawdown, this is the simple answer. I get my confirmations on the 1 minute time frame by using the Fibonacci tool, using chart patterns, using trend lines, and using support and resistance to give me insane amounts of pips. Now I want you to do just one thing for me right now. Go on your trading view and try and back test this strategy by using support and resistance, trend lines, the Fibonacci tool, and chart patterns to actually identify some of these sniper entries, which gives you insane amounts of pips just like this. Okay, so if you haven't watched my videos on trend lines, chart patterns, and support and resistance, please go back at this moment and then watch all those videos, because I really explained a lot of things in that video which is going to make you a very good trader and also a very good chart analyst. There's a particular strategy that I actually teach my mentees, which gives us incredible and insane wins by giving us some of these sniper entries. So if you're interested in how I trade the market using this strategy, then do want to join my August batch of mentorship, which is starting next 2 weeks. Find the link below, and if you're interested, send me a DM on Instagram or on Telegram at AbaTrades. I hope you enjoyed this video, and I'm going to be doing my best to be uploading such videos so that you guys can learn from how I catch some of these sniper entries that most of you love. Now guys, I would really appreciate it if you hit the subscribe button right below, and also like this video so that the YouTube algorithm can get it to many people. Also do want to leave me a comment or a review on how this strategy helped you with your entries. And that'll be all for today guys. It's AbaTrades right here. On to the next video, and peace out.